Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 29th, 2016. I am Frank Ochoa with your analysis for the week here, taking a look at the ES in a daily time frame. What you see right now is price has made a very solid reversal and comeback, obviously, ever since bottoming off of the bottom of the key range here, 1804s. We've seen a nice continuation back to the midpoint of the range, and now we've tested prices above the 1950 half key level for the first time in a couple of months. So that was very important, but the initial push beyond that zone all the way into 1968.75, the previous week's high, was rejected. Price closed back below 1950 on Friday. However, as overnight trading has played out, you can see right here the previous month's close price, 1930. Price has come into that zone and has been defended off of that level heading into the RTH session. And that is short-term bullish right there. If the market's going to be reclaiming that previous month's close price, that would imply at least an attempt to continue higher into the primary bull target for the week, which is currently 1990 quarter. So right now, it's very important to see how this plays out. We've seen these moving averages here kind of come up, so the push down into them on the first retest after the push above them was bid. We pushed to new highs, so a pullback into that zone again should also be bid for another potential squeeze to new highs. We also have 1921. That is the MCV right there. That area, since taking it bid, should also want to be defended by bulls. So right now, we see some good indications here that we could start the week rather bullish. However, we have to continue to watch the previous week's close price, 1942s, 1943s right there. That's very important because right now that's kind of a ceiling in price. If we look at the intraday time frame, short term, what you see right now is how price has pulled back again into overnight trading. Price pulled back into this 1927 zone right here and was bid back up. But now you're starting to see a little bit of overhead resistance come into play at about 1946, 1947. So price needs to get through that zone in order to mark its way higher. So right now we're looking at a key range that has kind of formed overnight here from 1947s down to about 1927s, and price is playing within that range right now. Overall, above the previous session or previous week's close, 1942s, 1943s could open up return back to 1950 and higher. Failure to get above that zone opens up a retest at 5-day VPOC at 1927. So right now we have a clear range to watch for early trading. If price can continue to hold those 1920s here, we could be looking at new highs into the primary weekly bull target. Again, that would be the 1990 level. All right, let's take a look at crude oil. Here's crude oil in a daily time frame. This is the actual contract. The front month 32.92 is composite VPOC right now. Price has been chopping around that level for some time, developing a very clear balanced range, right? We have a very clear range here that is developed. We have a key range from 40.5 down to 28.76, midpoint at 34.63. That gives us some clear key levels to watch. We also see that price is kind of coiling here. You can see a little bit of this action happening, which tells us we could be looking at potential expansion soon. Right now, 30.5 and also the 34.63, that's kind of the zone here that we're seeing a little bit of back and forth action. Eventually, a breakout from that range will spark significant movement. So anything above basically 35s here could open up a significant rally, perhaps back to 40.5. Failure to get above that zone, you can see the significant rejection the previous week could open up a return back toward previous lows with a shot at new lows ahead. Now, given the current downtrending structure of crude oil here, you can see how it's just been bearish this entire time. You can also see the pivot-based EMAs serving as resistance on the way down. This could be an optimum time here to identify a short or rejection of these price levels, could identify a sell opportunity for a push to downward targets here. If we do see expansion from this key range right here, the expectation would be a 100% move into 1702 with scaling points at 2289 and 2583. So obviously we have some big time downside targets to play to if this reverses off the top and breaks to the bottom. The same can be said to the upside with the upside targets as well. with a 100% expansion target as high as 52.24. So this key range right here is really going to give us the major longer term targets to play to, but until we see expansion, we're likely going to continue to chop around in this zone. Beware of the chop around composite VPOC. There's no real edge around that area. You got to play the edges of the range. So right now, kind of stuck in the mud a little bit, and there's not a whole lot of edge, at least on a swing basis. Looking at the intraday time frame, you can see here that prices right now basically holding below the 33.07 level. That's the bottom of the daily pivot range right now. Any failure to get above that level opens up a retest at 5-day VPOC at 31.86 with a primary downside target for the day at 31.44. Above 33.07 likely squeezes price into 34 evens, which is the current primary upside target for the day. All right, let's take a look at gold futures. Here's gold futures. We've seen a significant rally ever since we ID'd this key range here. Once that broke to the upside, we followed this thing right up to our targets. It's been a phenomenal mover. But now we have a key range that is formed on highs, 1191.5 to 1263.90, midpoint at 1227.70. And we've been chopping within the inner midpoints of that range here. So here's the midpoint, here's the upper 25 and lower 25. It's what I call a neutral key range here, where price is basically chopping in the middle distribution of that range. That tells me right there that prices are coiling up significantly. Eventually, we're going to see big time expansion out of this range. You can see how we've had lower highs and higher lows here, and that has led to a very, very tightly coiled range right about around composite VPOC of 1225.30. Watch this range very closely as significant expansion could be seen ahead. A downside break and hold below 91.5 opens up a move all the way back to 1119.10. Above 1263.90 would open up a push into the next upside targets as high as 1336.30. So we're going to watch this range. We continue to build out. Here's the NQ in a daily time frame. Very similar to the ES right now. You can actually see that the weekly pivot range has been higher value week over week. That's very bullish. Additionally, we have a very narrow pivot range this week. Well, not very, very narrow, but narrow compared to what we've seen before. And that could imply some nice volatility this week. Currently speaking, the bottom of the previous of the pivot range and also the midpoint of the previous week is bid. That's 41.89. Keeping that area bid would suggest a continuation to the primary weekly bull target at 43.51.75, given that this low state remains intact. So we could be looking at a nice follow through to the upside. But right now, everyone has to kind of watch this previous week's close, 42.30. Right now, that's offered. Above that level would squeeze. Failure to hold 41.89 opens up a move back toward 40.85, the midpoint of the key range, and also the previous week's low. Now, taking a look at the intraday time frame, what you'll see here is that prices are holding below that 42.26, which is a very, very important key level for us. That's the midpoint of the August key range, 42.26. It was support here and is now resistance here. So if we push above that level, look for a potential push into the upside key targets for the day here, 42.50 basically and 42.70 here. So above this level squeezes to those targets. Keeping this area offered, however, opens up a return to 41.81.5 with a shot at seeing further downside expansion into the primary bear target for the week at 41.73 and 41.52. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck, trade well, and happy Monday.